Hi, my name is Steve Hansen. I help to lead the client partnerships team here at Axiom Investors. And today I'm joined by my colleague, Bradley Amoyles. Bradley leads the global strategies at Axiom, and on a day-to-day basis, he is the portfolio manager of the Pengana Axiom International Ethical Fund. We sincerely appreciate you taking a couple minutes with us today. We would like to cover first, who is Axiom and what do we do? And then second, talk about why this is a great investment for the long term, and more importantly, why it might be a great investment today. And then finally, we'll conclude with a couple stock examples to help illustrate the process and some great ideas that we're finding in today's environment. So first and foremost, who is Axiom? We're a boutique asset manager based in Greenwich, Connecticut in the States with a 25-year history of managing growth equity portfolios. Today we manage about $19 billion in USD, and we do that on behalf of a global institutional and high net worth client base. We are a 100% employee-owned organization, and we're highly aligned with our clients and investors. And a great example of that, folks like Bradley are invested in the strategies they manage. They reinvest alongside our clients on a quarterly basis, and client partnership folks like myself are invested as well. So what do we do? We're growth investors, and we describe our style as being dynamic growth, and that has three key elements, the most important of which is identifying positive change. So we spend a lot of time ranking and scoring forward-looking company and operational data points to help us build a mosaic and get ahead of the curve when we invest. We also think about sustainability, high-quality businesses, good management teams, strong ESG alignment, and then finally, we care about valuations. So ultimately, what we're building with the Pengana International Ethical Fund is an ethically screened portfolio of companies that are growing and changing for the better, and where those changes are not yet reflected in market expectations over a midterm time period. So we get a lot of questions from our clients on growth investing and why we feel strongly that growth as a style will outperform and persist over the balance of our investing careers. So Bradley, I'd love to turn to you and hear your thoughts on growth investing today, and what are some of the tailwinds that help us to believe that this is a great style to be in today?
Sure, thanks, Steve. So to begin with, if one looks at growth over longer periods, it clearly is the most nimble strategy that allows us to navigate an ever-changing world and do it in a way that allows investors to compound their capital without having to engage in tactics like market timing. In the end, growth around the world is driven by what we describe as the 4Ds. And this really provides both the challenge and the opportunity, and really allows us at Axiom to use our toolkit in order to navigate and find these companies, size them appropriately at the most opportune capital levels in order to achieve the best performance. These 4Ds, the first two, demographics and debt, really are profound. They mean that around the world there are dramatic frictions to the pace at which growth can occur. People are aging, the world population is saving, and combined with the burden of incremental debt that we have incurred certainly since COVID, but incrementally since World War II, means that growth is scarce. And so for us at Axiom, we implement tools that allow us to seek out those companies that are achieving growth and doing it in a sustainable fashion, where the latter two Ds, the Ds that really describe the changing world, the deglobalization world, and how the world is structurally being disrupted by companies which outpace and evolve and are able to change more rapidly and more nimbly than others, will win. So for us at Axiom, those 4Ds are the foundation of how we implement our process using certain specific tools to our team here at Axiom.
Thanks. No, that's interesting. Another question I often get, Axiom had mentioned $19 billion today. We're coming off our best year in our history in terms of new inflows into the organization, and half of that came from existing clients who are topping up their allocations on a really attractive entry point into growth equities. Would you talk a little bit about why we think today is a good entry point for growth equities? So why growth now?
Well, Steve, I believe right now we've entered and we're in a golden period for growth stocks. And why is that? It really is. We've left behind the scars of COVID. We've left behind the effects of slowing growth, the effects of supply chain and transient COVID-induced inflation that resulted in very dramatic monetary policy that caused multiples to compress drastically last year. We're now in a world where micro and fundamentals trump. And when you apply that and include our tools like Axware, where we're able to score and appraise the discrete companies, we're able to size opportunities. We're able to find large addressable markets, companies that are growing and where the magnitude of the growth will be orders of magnitude higher than today in places like AI, in places like the pharmaceutical management of obesity, and then in niches where companies are targeting social media to create disproportionate growth in a small area like cosmetics and targeting young, affluent, affordable products for their customers. So in the end, we can build an all-cap portfolio that has high cadence, will compound, and provide excellent risk-adjusted returns for our clients.
Great. Well, that's really helpful. We would welcome any follow-up conversations with clients, so feel free to reach out to your Pengana representatives if you're interested. Thank you for your support, and we look forward to speaking again soon.